Hey everyone, it is Julie here with TipRanks, and today we're taking a look at two energy stocks that recently received an upgraded buy. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Today we're taking a look at two energy stocks that recently had their stock ratings upgraded to a buy, and this was by a 5-star analyst, Roger Reed with Wells Fargo. So today we're going to take a quick look at these stocks and how they've been performing lately, what Roger is now looking at when it comes to their stock's future, and of course how other Wall Street analysts weigh in. Don't forget you can follow along over on the TipRanks website or by downloading the TipRanks mobile app by using the links in the description down below. Now let's get right into these two energy stocks. First up is a company called Coterra Energy. Their stock trades under the ticker CTRA, currently priced just above $25 per share. Though they are up 16% year to date, they have been cooling down here recently and are down nearly 6% in the last few months. Coterra Energy is an oil and gas exploration and production company. The company has its hands in the best of both worlds, with solid assets in both oil and natural gas, creating a diversified portfolio capable of weathering economic headwinds. That portfolio includes a total of 672,000 net acres across its operating areas. This year, Coterra is on track to improve their production numbers, with success driven by strong performance in each of the company's regions. Coterra Energy does pay a quarterly dividend, which currently sits at 20 cents per share for a dividend yield of 4.66%. At the start of November, the company did report an earnings beat, and along with that, they also increased their future production guidance. They said that guidance was driven by faster cycle times and strong well productivity. The company also said that they're on track to well exceed their shareholder return threshold of 50% free cash flow for the year. The company reported earnings per share of 50 cents, which came in 6 cents ahead of analyst expectations, and revenues came in at $1.35 billion. Just a few days ago, our 5-star analyst Roger Reed increased his rating on the stock from a hold to a buy. He said that they were upgrading the stock due to their relative valuation and strong momentum on oil production growth. Over the past 12 months, management has deftly orchestrated a turnaround for the company. The company has been outpacing its production outlook for the fiscal year and increased their production guidance for 2 consecutive quarters. Given continued operational efficiency gains and strong well performance, we would not be surprised if the company positively revises its 3-year outlook come February. With his buy rating, he gives the stock a price target of $30 per share, which would be an upside of over 16% from current prices. And it seems that the rest of Wall Street does agree. Overall, the stock comes in with a strong buy rating based on 14 current analysts. With 11 buys and 3 holds, the average price target of $33 would be an upside potential of 30%. Down below, we can see Roger's rating here with that upside of 16%. There's a couple analysts also coming in at that price target. On the low end, we do have a few around 12% upside and high-end price targets all the way above 63%. And the second stock that Roger has recently upgraded his rating on is called Antero Resources. This stock, trading under the ticker AR, is currently priced at above $22 per share. They've had a bit more of a volatile year. Year to date, the stock is down 20%, and though it was making some gains here up into November, it has recently taken a downturn and fallen over 12%. Antero Resources is a hydrocarbon exploration and production company that focuses solely on natural gas. They have extensive holdings in the Marcellus and Utica shale formations of the Appalachian Mountain region, with over 440,000 net acres in the region, operating over 1,200 producing horizontal wells. Looking at last year's production numbers, the company's wells brought to the surface the equivalent of 104 LNG tanker cargoes. The bulk of this output was generated through hydraulic fracking techniques, which have made Antero one of the largest suppliers for the U.S. liquefied natural gas export market. They shared their most recent quarterly earnings near the end of October, where they did manage to come out with an earnings and revenue beat, and that was good to see, as previously they have failed to meet those expectations. For their third quarter, they reported revenues of $1.12 billion, which did grow 14% year over year, and earnings per share of 9 cents came in 3 cents ahead of estimates. The company said that both their drilling and completion teams had set numerous company records, and that, combined with the stellar well performance, led to quarterly production volumes above expectations, and as a result, they raised their full-year production guidance for the second consecutive quarter. And as you know, our Wells Fargo analyst recently upgraded his rating on the stock. He noted that we discern a positive rate of change in AR's operational performance and capital efficiency, and noted them increasing their production guidance for the second consecutive quarter. Management continues to feel confident on 2024 capital efficiency trends, with preliminary 2024 D&C CapEx expected to be at least 10% below this year's levels, holding production flat from first half of 2023 without baking in any cost deflation. His price target of $26 would mean an upside potential of nearly 15%. Now, overall, the stock does come in as a moderate buy. And that is based on 6 buy ratings and 6 holds. With an average price target of $32, that would still be an impressive upside of over 41%. And when we just look at our top analysts, that does move up to a strong buy. Looking at our list down below, we have Rogers' most recent rating here. On the low end, we do have our hold rating back before their earnings in October with an upside of over 10%, a lot around that 40% upside, and a high-end price target of nearly 68%. So that is a quick look at 2 energy stocks that recently got upgraded by Roger Reed from Wells Fargo. Let me know your thoughts on these 2 companies in the comments down below. Do you agree with the upgraded ratings, or what do you think is going to happen in these stocks' futures? I always appreciate hearing from you guys. Of course, please keep in mind these videos are never a suggestion to buy or sell any specific stock, just meant for entertainment and information. Please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a fantastic day, and I'll see you back here next time.